I think the economic outlook, both in the UK and globally, is pretty positive. I think we've started from a good position. We've seen markets rising quite strongly, and we've seen the IPO and flotation market in particular really hot, and that's building up quite considerably, and it's helping the economy by introducing new money into the investor base. Investors are actually getting some distributions back from that activity, then they're reinvesting that in the markets, and increasingly we're looking at new asset classes around the world. So as the economy develops and the desire for new asset classes similarly develops, then we're seeing Jersey in a really fantastic position to actually undertake some of those investment opportunities. I think that's a particularly difficult area, the emerging markets, to see which ones are going to do well and which ones aren't. We prefer to look at things in a longer term view and a value investment perspective. But I think Latin America seems to be in quite a good place to benefit from some of the economic developments going forward. I think China and India are regularly muted, as is Russia. And obviously with things that have happened very recently in Russia, things are starting to go backwards. So the adversity that you see from time to time, it's actually been able to cope with that from an investment perspective that's going to be the major issue when dealing with emerging markets from an investment point of view. Yeah, I think Jersey is a platform for facilitating investment into the UK and into Western Europe is absolutely critical. I mean, we deal with a lot of investors from all over the world, and we've seen, in the last 12 months, investments coming into equities of something like the order of $100 billion from the United States, 120 billion euros from Europe into equities, and a lot of that money is actually placed into the markets via the plethora of vehicles that suit investors via Jersey. So I think that's a particularly strong area that Jersey fulfills in being a legal jurisdiction that's viewed as safe, a safe political position and economic. So that stability that Jersey provides is extremely important for investors who are increasingly looking for that stability when they're deciding where to place their funds initially before they actually move into the markets that they wish to invest in. I think the old stalwarts of private equity real estate and private equity are going to continue to be extremely strong, and we're seeing a lot of money again coming back into those markets. I think the UK market has seen a lot of that money, especially in private equity real estate. 20 billion has been of commercial transactions have gone through London in the past year as far as real estate is concerned, but that real estate investment is moving now into Europe, so they're looking for value in particular in Italy and Spain, and a little bit in France as well, who've seen a lot of disinvestment, if you like, from France. So those are our major focuses. I think as far as infrastructure is concerned, again, investors are looking for yield, they're looking for real hard assets, and they're looking for inflation proofing. So infrastructure again is a very hot topic at the moment, and one that's attracting huge amounts of money. We're seeing people coming out of other asset classes, in particular out of gilts or bonds, and actually moving into infrastructure to get that pickup that they're looking for, as they believe that there's less value perhaps going forward in bonds and gilts. And I think finally the other aspect to look at is debt funds. Again, in the past 5 years, the top 30 debt managers in the world have raised over $320 billion worth of commitments, and currently there's something like 200 funds out there raising another $114 billion worth of commitments to put into that marketplace. So as the importance of banks in financing and funding businesses going forward, as that disintermediates, then we're seeing funds actually filling that gap to quite a substantial part. I think the factors that will influence the fund sector, clearly the regulatory regime has been extremely difficult to navigate for a lot of people, and has added a lot of cost and expense to investment and business generally. I don't see that stopping anytime soon. I think that will continue, and in some areas it's absolutely right that it can continue. But I think it's a cost that business is starting to look at quite quite closely. Well, I think Jersey in a post-AIFMD world is extremely well positioned. Certainly, that position, it's positioned itself very, very quickly. I mean, it was the first offshore jurisdiction to adopt all the AIFMD criteria, if you like. So I think it's in a very strong position to deal with EU investors, but also other parts of the world investors, if you like. So having that dual purpose, if you like, I think will be extremely attractive to clients who are looking to tap different parts of the investment world.